Hey, it's Michael Saul, but everybody calls me Tiny, and this video is Off We Go. Plus, what time frame should you use when you're looking to trade the Bitcoin futures? This is stock market analysis for the week of January 8th, 2018. Happy New Year. Hope you had a great week last week. If you would like to receive intra-week updates from yours truly, go to www.attackthemarkets.com, put in your first name, your best email address, and click the Sign Me Up button. Then go to the email you used to sign up. Look for an email from me with a link in it. You have to click that link to confirm that you actually would like to receive correspondence from me. There are apparently these evil bots that go around and fill out these forms all over the internet. This is what's known as double opting in, so just to make sure it was you and not some nefarious creature that signed you up. All right, so let's take a look at the market. 2018 gets off to a really nice start here as the end of year little give up, right? This was the mini crash. I'm just kidding. It was not a crash of any sort or anything like that, but it was, we opened at the highs and we closed at almost the lows of the day, but didn't even go back to the 20 EMA. Anyway, we took that out on the first day of the year, which was last Tuesday, and we just basically went straight up. Still looking for 275. I talked about that, I believe, at least 2 weeks ago, but I think in last week's video as well. We are stretched. I would not be surprised if we got a pullback. Remember, if you're watching my videos, you want to go back and look at previous videos, I say this a lot. New highs are a place to manage long positions, not necessarily get long, unless they come from a really nice pattern, like a flat base or a coil or a flag or something like that. But these moves up here, when we're extended like this, it's a great time to trail stops, trail stops, trail stops. Is it a shorting signal? No, it's not a shorting signal. Okay? But new highs are a place where people like to ring the bell and take profits. Remember, everybody, except I guess the people that bought at the tippy top, anybody who bought any of the way up is now profitable here. Okay? So if by, I don't know, some stroke of luck, and I'm sure some people did do it by just because they wanted to get in for the end of the year, they bought at the open on the last day of the year. Okay? On the 29th. Let's say they went in and bought at the open. Well, they're down. Okay, they were down by the end of the year. So, guess what? By the start of the new year, they were up, and then, of course, by the end of the week, they were really up. So, it's a place where people like to take profits. And, of course, it can continue to go. That's why trailing stops are my preferred method of trade management. Okay? All right. Dow. Similar. 25,000 was the big name. It was a big number, sorry. And, I'm not a big believer that the Dow is the best bellwether to look at what's going on in the market. I'd rather use the NASDAQ and the S&P. NASDAQ also had a really nice start to the year. Russell still lagging, but I do believe the Russell will break along with what the other indices do. Here's the mid-caps. I believe the Russell will have one push up into at least new highs, and I think that could be a work done scenario situation. Again, I'm not going to sit here and look to short there, but the Dow, the S&P, the mid caps, the NASDAQ are all up there. Now what happens if the Russell goes too? Okay, is that going to be work done? Okay, everybody got there. Now that's it. Let's take a break. Perhaps it's a good, if the Russell breaks, it's a good spot to manage your positions, even if they're not Russell stocks. Okay? Also had a great question from one of my fans. I think I have two of them total. Talked about the Russell. Since it outperformed in 2017, since it underperformed, there we go, okay, in 2017, will it outperform in 2018? The answer is not necessarily. Now, usually with the January effect, small caps tend to outperform their large cap sisters, at least early on in the year. So far, we're not seeing that. However, it does warrant our attention to see maybe these small caps can catch up a little bit. But right now, no, there's not a lot of interest in the small caps comparatively. Right? Again, it's not a shorty signal. It's not like, oh, they're doing terrible. No. They're just, compared to the large caps, even the mid caps, they're just not doing as well. And that's because, in my opinion, right, small caps are more speculative. I mean, that's not my opinion. Small caps are more speculative in nature, but seeing them lag is saying that the big money, even some smaller money, even from mom and pop investors, they're going into the bigger name stocks. I mean, if you look at some of the tech names, okay, here's Amazon, broke out of this triangle. Bezos continues to get richer. Here's Apple, not yet at the highs, but also had a good start. Here's the Alphabet, up at new highs. Here's the Facebook, up at new highs. Okay, what about the Netflix? Yes, I'm putting the in front of everything. I know it's not technically the real name, okay? Don't send me the emails, please. Netflix up here at the highs. So, yeah, everybody was talking about, tech is falling out of favor. Yeah, all of a sudden, what do we got here? We got a little switch with money flows at the beginning of the year. And, of course, our tried and true Caterpillar continuing to move out to highs. Here's John Deere. Let's look at some of the semiconductors. So NVIDIA came up towards the highs. All right, see if they're going to break. It was lagging for a little bit. Like I said, it wasn't a short signal because it's just, it's a strong stock. Here's Clad Tanker, pivoted off the 50-day moving average. Here's Intel. So your possible 2B top, it came up to the 50-day. I want to watch this here. I don't think this is a short signal per se, but if it struggles here at the 50-day, this may decide it wants to pull back a little bit. Here's Banks up at the highs here with the little turn candle here on Thursday, so we want to watch that. Let's look at Bank of America, JP Morgan, Citigroup, Northern Trust, all doing okay, hanging okay. Here's Goldman, lagging a little bit. Again, is it a short signal? I don't see it. Is broker-dealer at new highs, but Goldman acts more like a bank. Here's Morgan, like a Legg Mason, but I mean, Goldman I would definitely put on my radar if the market is going to continue to move. Again, I think we're stretched, so I would not be surprised if we saw a pullback, but that is shaping up into a bull flag. How about the two January effect stocks we talked about last week? The January effects list did pretty good this year, but again, I only talked about two stocks, so I'm not going to sit here and do revisionist history and go, look at this big list I gave out to the private clients. So these are the two that I made public. So General Electric, if you bought on the high of the last day of the year, nice, but even if you waited for the breakout, also nice. I sent out an update on Friday talking about how here is the spot to potentially trail stops or take a piece of the profit if you want. Again, if you were on the email list, you got that. That was not private. That was laid out to everybody who's on the email. So join at attackthemarkets.com. Okay, so that's General Electric. And then CAVM was another style of January effect stock, not the big beat-up stocks, but the stocks that were in power positions heading into the year. That also broke for a nice gain. Didn't quite get to a new high, but got close. All right, so the break here would be 85.51. It got up to 88.81. So even if you looked at $3, still a nice percentage gain on an $86-ish stock. Okay, so those are those two stocks. Let's look at gold. Gold looks like it could be ramping up to try to catch the September highs. How about the GDX? The GDX. Now, my good friend Mike Swanson always says people do not get interested in the GDX until it's over 24. But look at this pattern here. Want to watch the GDX here because it looks like it is coiled up and may want to push through. Again, got to wait for confirmation, but if it does, could make an assault on that 25.60 number. How about oil? Oil continuing to rock and roll here. Up at the highs. See what it does. Let's look at the weekly chart for a second. Yeah, see weekly chart. It's still in Laggartville. But if it does get through this is some pretty good resistance here. It's a previous support, now resistance from 2015. It's a previous resistance, now resistance from 2016. So let's see if this can push up. We have the next level to watch at 1550. So that's a pretty decent move from here. And what about bonds? Everybody's talking about a potential bond rally. I still don't see it. Does not mean it's not going to happen. I just don't see it right now. I see it as being very clunky here and gearing up for a potential move. Maybe if the market gets a decent pullback, maybe money flows into bonds. That's something that we could look at, but of course doesn't necessarily mean it's going to happen. Now, we have the early warning system coming up. If you've read the Stock Markets Almanac, that's invented by Yale Hirsch, the first 5 days of the year. They give you a warning of what the year is going to do. Unless we get a really sharp pullback on Monday, it looks like the first 5 days are going to be net positive. Then, of course, there's the whole January early warning system, which is at the end of the month, etc. So just something to keep in mind. Again, I don't like to time the entire year based on the first 5 days. And just because it says, oh, the market's going to be up, that doesn't mean we can't go into a correction during the year, go sideways for months at a time, etc. I think we're stretched. I continue to think we're going to get a pullback. I don't see this as a short signal here. And as of right now, if we do get a pullback, I will be looking at it as a buying opportunity. Again, just like this last one. Okay? So again, don't confuse it with he's a bear. I'm not a bear. I just don't believe, based on past performance and based on the history of the market, that we go straight up. All right, it's not a hockey stick. It zigzags. Even this monster move that we've had, zigzag, zigzag, zigzag. So when we get like this, when we get out in front of us, I am looking for a pullback. Then I'm looking for a potential buying opportunity. So let me pull up. For those of you, again, I'm getting a lot of questions on the Bitcoin futures. So you can get Bitcoin charts. They were live for a while, but they just made them delayed. Now on the, of course, if you have the charting program, you can. But this is a good way. If you just go CME Group by TradingView here, you just go. I Google when I was looking for free charts to show everybody so they could look at them. I said, let me look up CME Bitcoin futures, and then boom, you just click on chart, and there it is. It's real easy to find. Anyway, I get a lot of questions of what time frame should I be using, or should you be using? And if you see here, this is the 30-minute chart, which is, if you're trading index futures, is usually a large time frame for me. I don't trade usually on that big. I want to see what the 30-minute chart's doing, but I'm not really looking to see what's make trades off the 30-minute chart. But if you see, look how, the futures are pretty sketchy here, even on the 30 minutes. There's a lot of gaps. It trades even thin. If you go to the hour chart, it gets a little thicker. Okay, but look, pieces like this. This is not the kind of chart that you want to see, right? So what you want to see is you want to see the volume, and you want to see nice, thick candles. All right, and by thick, I don't mean width-wise. I mean as far as you don't want to see these gaps in here and what looks like to be thin trading. So I found that the 3-hour chart, there are gaps, of course, because the futures market closes, unlike the cash market for Bitcoin. But so I like the 3-hour chart, and there was a gorgeous setup here. I pointed it out during the week. I actually had my trend line drawn here first, so it kind of broke, came back, and then broke. But that's why you can adjust these lines, because sometimes you have to. This was just a beautiful textbook triangle. It took about a week or so, or whatever it was, to form, and then it coiled up, and then boom, broke out. Let's see what it's worth so far. So far, it's worth. I'm not really used to using these. I'm used to using my own. But let's see. So it broke here at 15,200. And so far, the high of this has been 16,850. I think it's backing off a little bit in the cash market. So there are definitely opportunities here. It's, in my opinion, a bit volatile. I'm still staying back for now, but I am getting ready to dip my toe in. If you would like information on trading the cryptocurrencies, I have a friend who is a trader, very smart, very informative, and he has some information on that. If you either send me an email or you just join my email list, I will send out the link. I've already sent it out twice last week, so I don't want to bother people with it, with constantly sending it out. But the people who have, he had a webinar, and the people who attended it were pretty happy with it. So anyway, just join the email list or send me an email to tiny@attackthemarkets.com. You can send me other questions as well. I will be happy to answer them. Join the list so you can get intra-week updates. Otherwise, I will talk to you in next week's video. Have a great trading week. And that's it. Talk to you soon.